Hello, class. In this lesson, I'm going to be working through the stock, property, and liquidating dividend sample exam question. So to begin, we're just going to read through the question, what it's asking. So Rhapsody Inc. had the following balances in their equity accounts at June 30th, 2021. They had common stock at $2 par of $1 million. It had paid-in capital in excess of par common of $7.5 million, and they had retained earnings of $5 million. So A says Rhapsody Inc. declares a 15% stock dividend on common stock on June 30th, 2021. The market price per share on the date of declaration is $40. We're going to prepare the journal entry for the stock dividend at the date of declaration. So to work this question, the first thing we have to do is we have to determine if it is a large stock dividend or a small stock dividend. And the way we do that is we compare the stock dividend. We compare the stock dividend percent to 25%. If it is less than 25%, it is small. And if it is more than 25%, it is large. So A says they're giving a 15% stock dividend, and 15% is less than 25%. So this is a small stock dividend. Because it's a small stock dividend, we're going to use the fair market value method. The fair market value method means we're going to issue the stock at the fair market value at the date of declaration. On this problem, we have to work backwards a little bit. We don't know how many shares of common stock there are, but we know that the common stock has a par value of $2. We also know the balance of the common stock account is $1 million. So we can determine the number of shares by dividing this 1 million by 2. So we'll do 1 million divided by 2. That means that before we issue this dividend, there are 500,000 common shares. 500,000 common shares. So the next step will be multiplying 500,000 shares times the dividend. The dividend is a 15% stock dividend. So that means the company is issuing 75,000 new shares. We issue these new shares at the fair market value, and the fair market value on the date of declaration was $40 a share. Which means that the company is issuing $3 million in new shares. Then we have to allocate this $3 million between common stock and additional paid-in capital. So we said we issued 75,000 new shares. So to find what goes to the common stock account, we take the par value of $2 and multiply it by $75,000. we'll put $150,000 into the common stock account. The remainder we'll put into APIC common. So 3 million minus 150. That'll give us $2,850,000. Now the problem asks for the journal entry. So our journal entry will be to debit retained earnings. I guess I'll do it. Debit retained earnings for 3 million. Credit common stock dividend distributable for $150,000 and credit APIC common for $2,850,000. And you could also call this paid in capital in excess of par common if you would like. And that would be how we would answer A. Then moving on to B. B asks, if instead Rhapsody Inc. declared a 30% stock dividend on common stock on June 30, 2021, prepare the journal entry for the stock dividend at the date of declaration. And it says to assume that the market price per share is the same. When we have a stock dividend that is greater than 25%, so 30% is greater than 25%, we deem this a large stock dividend. When we have a large stock dividend, we are going to use the par method. So when we use the par method, we will issue the new shares at par. So the first step is to determine again that the number of shares, new shares that are being issued. Back in A, we determined that there were 500,000 shares before any dividend were distributed. So we're going to take that 500,000 share number, but this time we're going to multiply it by 30%, because 30% is the amount of stock dividend in B. So we're not going to have 75,000 new shares. Instead, we are going to have 150,000 new shares. And these new shares we're going to issue at the par value using the par method. So the par value per share is $2. 2 times 150,000 is 300,000. Our journal entry would be a debit to retained earnings of 300,000 and a credit to common stock dividend distributable for $300,000. And that would be our answer to B. C then asks, instead of declaring a stock dividend Rhapsody Inc. declared a property dividend of the company's investment in Victory Inc. on June 30, 2021. The carrying value of the Victory stock is $4 million and the fair market value is $6 million. We're going to prepare the journal entries related to the property dividend declaration. So when you have a property dividend, we have to follow the following two steps. Step one is we have to adjust the asset to fair market value. That's step one. And then the second step is we're going to record the dividend at the fair market value of the asset. So in this case, Rhapsody is distributing in this dividend stock. The fair market value of the stock, the problem tells us, is $6 million. We're going to take the fair market value minus the carrying value of $4 million. And this is the book or the carrying value. And this will give us our adjustment amount. The company needs to make a fair market value adjustment of $2 million. The Rhapsody would debit an investment account in Victory stock for $2 million. And they would credit a gain on investment account for $2 million. And this is our step one to adjust the asset to fair market value. Step two is we have to record the dividend. In this case, the dividend is for the $6 million fair market value. But if we remember from our question, if we look back at the question, the company only has $5 million in retained earnings. They only have $5 million in retained earnings. This means that this is a liquidating dividend. So now we have to calculate the liquidating portion of the dividend. So the dividend is for $6 million, and we have $5 million of retained earnings. That means this remaining $1 million, we will have to put to additional paid in capital common, or you could also call it paid in capital excess of par common. So our journal entry would be a debit to retained earnings for $5 million, a debit to additional paid in capital common for $1 million. And then we would have a credit, and the credit goes to property dividend payable of $6 million. And this is how we would answer C. Hopefully this lesson was helpful. If you have any questions related to this sample exam question or any of the material that we have covered in class, feel free to stop by my office. I'm available on Tuesdays and Thursdays from 9 to 3:30. And on Friday, I'm available from 9 to 11 or by appointment. I'm available on Friday between 9 and 11 and by appointment. Hope you are studying well, and I'll see you in the next class. Bye.